Let's dive straight into some more earnings analysis. Dixon Technologies made a very impressive debut on the bourses about 6-8 months back. Saurabh Gupta, who's the CFO of Dixon Technologies, joins in for a review on their numbers. Saurabh, it's good to have you on the show. I see margins pitching in higher, closer to the 5% mark. Is this sustainable? Do you think you can expand more on margins?
Yeah, good morning. Thanks for having me on the show. Yeah, we definitely think, I think so. If you look at our Q4 run rate, the margins have expanded by almost 160 basis points. And at a total level, at an yearly level, the margins have expanded by 40 basis points. We think with the growth and the scale and size in the business across each of the verticals, the margins will continue to see an expansion of 30 to 40 bips each year. A lot of economies of scale benefits would kick in, procurement saving benefits would kick in. So we are very confident that the margins, so our growth in profitability would actually be higher than the growth in revenues going forward.
That's good to know. And while of course there has been a bit of margin expansion seen, I think it is the top line, however, that does look a bit disappointing. If you could just tell us what the sales mix was like for the year gone by, and what are the segments and products that are essentially driving a majority of your sales?
Yeah, so actually the revenue looks lower because it's not a like-to-like comparison, because what happened last year, our 16-17 revenues, FY 16-17 revenues, a lot of our revenues was coming from the excise-free zone, where the excise duty element was included as part of the revenues. And since the implementation of GST from July 2017, we have been reporting net revenues. So if I do a like-to-like comparison at a yearly level, which is showing a 14% growth, and if I adjust that number for the excise duty or in the excise-free zone, the number should have looked somewhere around 20-odd%. So there is a growth in 20% in revenues, the way you should look at it, and there is a growth of almost 30% in a profitability in PAT. And if you look at segment, I think so all the segments, consumer electron, yeah, please.
Outline the export potential for your products in each of the segments. How much can that contribute to your overall revenues in 2020, and by when do you start exporting LEDs?
Yeah, so export, I think so. Lighting, we will set up a facility down south. We already have a facility where we have LED TV line and CCTVs and security DVR cameras there. Lighting facility should be up and operational in the next 4-5 months. We are already started talking to some of the global players in lighting. So we are seeing very positive traction in the lighting segment as far as exports are concerned. So very hopeful by end of this financial year we'll have some update to give to the market.
Okay, just to keep it with your top line, Mr. Gupta, looking at the current market scenario, you've spoken about new product segments as well. How do you see your top line shaping up for, say, FY19?
So we are very confident. We think that our top line, our revenues can continue to grow by 25%. And with the expansion in margins, I think the growth in operating profit and the growth in PAT should be somewhere around 33-35%. So we are very confident that we will maintain a 25% kind of a growth at a company level.
That's encouraging to hear. Are you seeing pricing also improve? While your earnings growth has picked up, do you think that additional orders can come in on better pricing as well? Are clients comfortable with that?
Yeah, so what is happening is any new customer addition has a significant multiplier operating leverage, because your costs don't go in the same proportion, especially the corporate costs in each of the verticals don't go in the same proportion. So when you add, so the focus is in each of the verticals is to keep adding more customers, deepen your relationship with your existing customers by giving them more product offerings, do more of backward integration, migrate more and more to your own design, where you have the IP, where you control the design, and there the margins are also higher. So you're absolutely right. As we keep adding more customers, and that we have demonstrated by adding customers in the last 2 years in each of the verticals. And if you look at my lighting segment, the lighting segment over the last 2 years, I've added 6-7 big customers and that is reflected in the margins. My margins have expanded by almost 300 basis points, as against 3% last year. It has moved to 6%. And similarly, you are seeing a trend in the washing machine segment as well. We are adding more customers. And in the consumer electronic business, I think so the order book is quite healthy, but you will see a uptake in margins from Q2 of this current financial year.
Fair enough. Thanks, Saurabh. Thanks very much for joining in with those details. I think the margin expansion is something the market would latch on to largely in those numbers. Dixon Tech has done a decent job this time around.
Okay, well, on that note, I think we'll slip into a very short break right here on the show. But come back, we have lots more lined up for you when we come back.